After-hours trading means buying and selling stocks during times when the main stock market is closed. Investors and traders use special electronic networks to make trades before or after regular market hours. This can offer chance and flexibility, but it is important to understand how it works and why it is different from regular daytime trading. After-hours trading takes place outside the regular market session, which runs from 9:30 in the morning until 4 o'clock in the afternoon, Eastern Time. Using electronic networks, known as ECNs, investors are able to buy or sell stocks either before the market opens or after it closes, making trading possible almost around the clock. These extended hours can be divided into pre-market and aftermarket sessions. The two key types of extended trading sessions are the pre-market session and the after-hours session. The pre-market session usually starts at 4 o'clock in the morning and ends at 9:30 in the morning, Eastern Time, just before the regular market opens. The after-hours session begins at 4 o'clock in the afternoon and runs until 8 o'clock in the evening, Eastern Time, after the regular market has closed. These sessions give investors more chances to respond to news and events outside standard trading periods. Many people trade after hours so they can quickly react to breaking news or earnings reports that come out when the market is closed. Some traders wish to act on important price changes right away instead of waiting for the next regular session. Extended sessions are also helpful for those in different time zones or who cannot trade during the day. In some cases, investors want to get into position before the market opens, hoping to benefit from moving faster than most. One of the main risks in after-hours trading is lower liquidity, which means there are fewer buyers and sellers compared to regular sessions. With less activity, it is harder to find someone to trade with, so buy and sell prices are often farther apart. This can result in paying a higher price to buy or accepting a lower price to sell a stock, making it difficult to get the best deal. After-hours trading often comes with higher volatility, meaning prices can move much more than during the day. This happens because fewer trades can cause larger swings and news releases can move prices quickly. Even small trades can lead to sharp increases or decreases in stock value, so investors need to be prepared for fast and unpredictable changes. Another risk is wider spreads, which are the differences between prices people want to pay and prices people want to accept. During regular hours, spreads are usually very small, sometimes only a penny or a few cents. In after-hours sessions, the gaps can grow to 10, 20, or even 50 cents or more, raising trading costs and making it harder to buy or sell at a good price. There are more risks to think about when trading after hours. Large institutional traders may have better access to information or faster systems. Most brokers limit trades to limit orders, where you set your maximum buy or minimum sell price and may not allow market orders. After-hours prices do not always match the next day's opening prices, so stocks can jump or drop when the market opens again. Finally, trades might take longer to complete or may not go through at all. If you decide to trade after hours, always use limit orders to control the price you pay or receive. Consider trading smaller amounts because of the extra risks. Focus on stocks that are traded by many people so that prices are more stable. Make sure you understand your broker's rules and any extra fees before placing trades during extended hours. After-hours trading can give extra opportunities and flexibility, but it comes with challenges like lower liquidity, higher volatility, and wider spreads. To reduce risks, use limit orders, trade small amounts, and choose highly traded stocks. Only trade during extended hours if you fully understand the special risks and have a clear strategy for your investments.
If you like this video, hit that like button and don't forget to subscribe. Visit codelucky.com for more such useful content.